Ladies and gentlemen, welcome back to the Tipping Point series, also as an extension of the FinTech Minute Stake. With us today is a very special guest whom I've known for many years and has come down to Hong Kong from Dubai. We are with Ronit Ghose, who's a global head for the future of finance at Citi, erstwhile Citibank, as we all knew about it. Ronit's been in the world of money banking for quite some time, but has also evolved with
the
times,
times
and technology, and now looking at the future of money. We're going to be talking a little bit about this being Ronit's Future of Money, Fintech, AI, and Web3 book out on Amazon UK, soon on Amazon US, and those of you in Hong Kong can also access it very soon. We will talk about the future of money, but I want to first ask Ronit about his time in Hong Kong so far. You've been spent a day. It's been a while since you came back. How are you finding it?
This is actually my third visit in the last 6 months.
Amazing.
So, yeah, I've been to Hong Kong quite often.
And Ron is known as the A380 man. If you want to follow him on Twitter, that's where you go. Yeah.
Ronit A380 or on LinkedIn.
Yeah. So, beautiful day today. We got lucky with the sun break.
Yeah.
Great background, the Lion Rock spirit.
Lion Rock. We talk about Lion Rock in the book.
As well. I didn't know that. What do you speak about in terms of the Lion Rock? Yeah.
There's a section in the book about neobanks.
Okay.
And the section's called Moscow, Istanbul, and Hong Kong.
Nice.
And it's all about neobanks. It starts with Tinkoff Bank in Russia. And there's a segue to Hong Kong because Oleg Tinkoff, the erstwhile founder of Tinkoff Bank, I met him for the first time in Hong Kong, believe it or not.
Okay.
And that's why I talk about Hong Kong. But I also talk about Hong Kong because there was a series of dinners I did about 5 years ago at the restaurant called the Sultan's Table in Central. Tatler Asia called it a hidden gem which impresses with an exotic taste of Turkey, complete with spicy punches. It warned the hike uphill might be difficult for some. Sadly, it shut down, apparently.
It did, but it was very flavorful. But we have newer restaurants in Hong Kong bringing in newer flavors from across the world. Yeah.
Excellent. Sadly, we never made it to Chart, did we?
Well, we will soon. If
soon.
not, there are others as well. Chart is a very famous Indian Michelin star restaurant based in the Rosewood. That's where we're filming today.
Exactly.
And I think this is actually a good conversational segue, if I'm going to use
Chart
that.
To Chat.
Chart to Rosewood and the New World Group, right? New World Group, in some senses, was traditional economy, but now transitioning with a lot of interest in new economy. Adrian Cheng, CEO, has been doing a lot of work in investments, looking at art, looking at Web3, but also in fintech, wealth tech, and so I want to talk a little bit because you've kind of straddled this world of TradFi into DeFi. Your Ronit's team and Ronit himself have generated and released a series of reports on Web2, Web3 over the last few years. Must reads. You should download them. Go to his page and you'll find them there. And I loved that transitional table that you had for Web 1.0 to
Lion Rock.
Lion Rock was one of the hills in between Kowloon Peninsula, right behind there. The stacks of Hong Kong.
He didn't believe me when I said that I talked about
I
Lion
can
Rock
see this.
in the book.
If you're going to look at it, it's page 95.
Lion Rock
You're going to find the Lion Rock spirit.
Yeah.
So keeping that in mind and using New World as an example, but you've also seen this not just in Asia. You're now in the Middle East, which probably is now geographically very central for a lot of fintech.
It's in the middle.
How have you seen this transition from Web 1 to 2 to 3, but more so the Web 2 to Web 3 transition? What was the past of money that is now transitioning into the future of money? Use that very crudely stated bunch of words.
Yeah. So one of the themes we talk about in the book and generally in my research is what is money? And on a day-to-day basis, we don't really think about what is money, which is correct, because the role of money for most of us, unless you're writing a book on money, is to do something else.
True.
So money is all about payment, doing a transaction, counting, units of account, or storing value, right? That's the classic definition of money, 3 features. And we don't want to do money for the sake of money. We want to do money for something else. So We want a mortgage to buy a house. We're using our card, our debit card or our credit card for shopping or holidays. It's not the money bit in itself that's important. It's to do something else. Or in high finance, you do a big transaction, a big structured loan or IPO to raise money to do an investment or to help the investors cash out, or it's always just something else. And so we don't really think about money most of the time. But actually, when you stop and think and just pause, money is like the weirdest thing out there. And I don't mean crypto, and we can debate whether crypto is money, but money is modern money since I'd say 1973 is the weirdest thing out there.
For those who don't know what happened in 1973, we're looking at post-Bretton Woods.
Bretton Woods, yeah.
Once
so basically,
the gold standard went away, but go on.
Before 73, most currencies in the world were linked to the dollar, which was linked to the gold standard. So technically or theoretically, you could go into the Federal Reserve and say, here's my banknote, I want my bit of gold. Most of history, money or currency has been linked to an asset like gold, or actually silver. So most of modern history, say from the 1500s onwards, silver was the coin, or literally the coin, the currency was a silver coin, which is why the Hong Kong dollar is called Hong Kong dollar. You know that, right?
I know that, but do you want to tell our viewers about the history?
You know that story, right?
Yeah.
So I love when I come to Hong Kong asking people, why is the Hong Kong dollar called the Hong Kong dollar? And people say, it's the currency of Hong Kong, and the US dollar is the biggest currency in the world, and the Hong Kong dollar is pegged to the US dollar, or has been for the last X decades, right? I forget how many decades, but probably for as long as you've been alive, but not as long as I've been alive. Hong Kong dollar has been pegged to the US dollar, so people assume that's why it's called the Hong Kong dollar. Spoiler alert, it's not. It's not. Hong Kong dollar is called the Hong Kong dollar because when the Brits discovered in air quotes Hong Kong, well, actually bombed the ... out of and
anyways,
got Hong Kong for a bit. Sorry, bit of politics we shouldn't. They obviously got for X number of years Hong Kong Island and new territories.
Kowloon side,
yeah, that side. So the Brits began to do trade, and then banks were built here, Oriental Bank, and then what became Hong Kong. A few years later, Hong Kong and Shanghai Banking Corporation. But the local community here in the region, the broader region, the South China region, South China Sea region, did not accept British sterling, pound sterling, as the currency because they had their own currency. And it wasn't a Chinese coin. It was the Mexican silver dollar. Mexican. It used to be obviously called the Spanish silver dollar because the purest silver coins came from Mexico or Mexico or Peru, or anyway, in the Pacific, the trade that was happening between what we now call Mexico and the Philippines, that trans-Pacific trade, Mexican silver coin was the coin of the trade. And as a result, broadly in the region, when merchants, traders found out that silver coin had really pure silver, they began adopting it. As a result, which you may know, you're into all this, China, Imperial China, up to the 1930s, had a silver coin. They were on a silver standard, not the gold standard. But much of the Western world from the 1800s on a gold standard. 1970s onwards, we came off that and we went to what's called fiat currency, i.e. currency not backed by gold or silver or bronze. And in the book, chapter 1, we talk about when fiat began. Do you know when fiat currencies began?
I'm not sure, 1400s?
Close. Not quite.
Okay.
You're 100 and something years off. Fiat currency, or currency not backed by assets, began in the late 1200s.
Okay.
Another Chinese angle is Kublai Khan, the grandson of the great Genghis Khan. Kublai Khan in the late 1200s wants to go on another military rampage. in this case, it's a naval one. So he goes to his, I guess, treasurer, CFO, and goes, I want to invade XYZ country, what we call Japan today. And the treasurer, CFO goes, there's no money. He goes, boss, the treasury is empty. He goes, why do I need to have coins? I'm the great Khan. Just print money.
Yeah.
And put my stamp on it and say, you will accept this money. You will accept this paper as money, or I will kill you. So that was the origin of fiat money. So, little known fact, the Mongols did lots of things like destroy large parts of the world, including Baghdad. But they also gave us this innovation that we call fiat currency.
Yeah. And how's that evolved now? And we've had fiat currency. We've seen the 80s. You've seen the boom. The 80s was all about hyperinflation due to a variety
70s.
Of reasons. Late 70s too, and then dealing with the high interest rates in the 80s.
High interest rates in the 80s. The Volcker period.
Those people who are not aware and have lived in the last 10 years in close to zero interest rate, excluding the last 2 years. You had rates as high as 20% central bank rates, right? And bond rates higher than that in the US during the 80s. How has that transitioned into where we are today at this crossroads of multiple conversations happening on representation of money, or let me rephrase that, representation of assets and value in different elements, and I think that conversation is pertinent because you spoke about innovation by the Mongols. The Mughals.
They probably
Mongols,
did some as well. Who
they
knows?
did some as well in different ways. But when the Mongols did that is innovation. That's technology, right? So you could say fintech, right? Technology for finance, all the way back. The Monk tech. But coming back to that, I'm not sure it's going to stick. When you look at that evolution, and now we're here at this crossroads of multiple new technologies or older technologies hitting their hockey stick, as it were. What do you see as that transition? What is the main key elements for this transition, and what are you seeing in today's? So the present of money. We've talked about the past. We've had the transition from fiat into the current state, and then we'll move to the future.
Sure. So, money reflects some social concepts and technology realities. By social concepts, I mean we need to actually have this idea of we're a community. And it sounds like a basic thing, but money is intrinsic, or if you like, internal, endogenous, if that's the right word, to the community. It's the community needs a way to transact value, and in oldie times it starts with gifting. So Musheer and I are in the same community back, it's 5,000 years ago. He does something for me, I do something back.
The barter system, right?
It almost predates barter. It's obligations. So the barter system is, I give you a chicken and you give me a goat or something. I don't know, or you do woodwork for me and I do accounting or whatever, right? But actually, in the history, so oftentimes in the history or the potted history of money, people say it starts with barter. It starts with gifting, not barter. So by gift is, I do something for you, like, I don't know, I look after your chickens, or your, I don't know, pet tigers or whatever, 5,000 years ago, pet elephants, and then you do something back for me, and you keep count in your, in our heads, right? Oh, I did 2 chickens for him, he owes me. You can say it's barter, but it's actually gifting or social obligation, which they can say is IOUs, and then the IOUs become effectively debt. So, in a way, debt, you could say, precedes money, which is like conceptually, like, hang on, I'm sure you get the money first, then you get but that's how money starts. And then you start putting it into representations like shells or tokens or beads or even cloth. So if you ever are in a city, like, there's only a museum that the Central Bank runs in London. Bank of England has a fantastic bank museum, or British Museum has a history of money gallery, and all these central. Here in Hong Kong, actually, if you're a friendly HSBC banker or friend, gets you into their archives. They have a lovely museum, actually it's not far from somewhere around here. And there you could see like the original kind of bronze coins used in Imperial China, or the banknotes with Mexican dollar printed on it by HSBC in the mid 1800s in this region. And so you can actually see what this money looked like. But is a reason why paper money, I talked about fiat money, started in China. Actually, paper money also started in China. Why? Because the Chinese invented printing. So, it's obvious in retrospect, but if you invent a technology or a technology changes, you use it for money. So it's a social concept, an imaginary concept. I'm a community, whatever. I need a value transfer or a way to count. That's money. So it's a mental idea. But there's also a technology aspect. Because before you have printing, how are you going to get paper money? You don't have printing.
Yeah.
And I'll get back to Bank of England. That's the reason we talk about in the book as well, why there are 4 mulberry trees in the courtyard of the Bank of England, because the first paper money in China was printed on the bark of a mulberry tree. Yeah. So money literally grew on trees. That's the English saying, right? Money doesn't grow on trees. Well, actually, they literally grew on trees. So so now, fast forward, we've been living in this world, mobile phones. I mean, okay, I've got an iPhone, but it's okay if you're a Samsung or Android user. That's cool too. This is our compute platform, our communication platform. This is what we live on, right? And you could think about most of the fintechs that exist right now, the OG fintechs. So in this time zone, Alipay, probably one of the OG fintechs. In North America, you say PayPal. Obviously, PayPal's global, but starts in North America. In Europe, maybe Klarna from Sweden. Where did they all start? About 20, 25 years ago.
Yeah.
And what did they start to solve? What was the problem they were solving?
Shopping.
Online shopping. Because 20, 25 years ago, it was desktop internet, but the consumer internet's taking off in the mid 1990s and picking up speed late 90s, early 2000s, and people are beginning to shop online and they need a way to transact. So if you're in China 20 years ago or in the US 25 years ago, you're like, how do I pay? If I buy something online from Musheer, is it a different part of the country? How do I know what Musheer is selling online is actually what I want? I want to, buy whatever. Maybe not a phone, it didn't exist then like this, but whatever it is, I'm buying. A book. Books always existed. I'm buying a book, but how do I know it's the edition that Musheer's advert says it is? So I need a digital escrow. And that's how Alipay starts.
Yeah.
Escrow is a really old legal idea. So how does it work? I go online, I see something Musheer is selling that I like, and I go, I'm buying it. And I send my money to Ali. Musheer sends the product to me. I verify that the product is what I asked for, and I then tell Alipay, it's the thing I asked for. And then Ali releases the money. That's how it started, before obviously many years later becoming ubiquitous in a duopoly, a point-of-sale payment with WeChat Pay. Same happened with PayPal in America, Klarna. So shopping. Now, why did they take up, why did the payment rail for shopping become these fintechs? Because the existing financial institutions 20, 25 years ago were like, shopping online?
Sounds a bit dodgy. Yeah.
Can I say it? Porn and gambling is supposed to happen online. We don't do that, but we're like, we're serious institutions, right? The big card companies, the big banks 20, 25 years ago were like, we don't do this. And that created the gap. And so whenever you have a new technology emerge, followed by new business models, the new technology in this case was consumer internet, or the internet, and the new business model was e-commerce, then you get the option of a new payment. Now, this is exactly what we're living in. So in the book and in other research we do, we talk about 3 novel or emerging technologies. Some of these have been around for decades, but they're now picking up speed. So number 1, AI, which has been around in academia for 70 years, but Gen AI, because of academic advances, model advances, and also the huge amount of compute and data gains in the last few years, Gen AI is taking off. We're at their takeoff point. Number two, we talk about blockchain and crypto, which kind of been around for 15 years since the Bitcoin white paper. But like we were discussing over breakfast today, on the RWA side or institutional adoption side is again at an inflection point, a real takeoff point. You were talking about over breakfast, like so many people in Hong Kong and other places working on that. So digital assets or blockchain-based assets or payments. That's second. And third one is extended reality, which is like a umbrella term for VR, AR, and MR. So virtual reality, augmented reality, and mixed reality. Some people called it the metaverse 2 years ago, a term that got hyped up. So these emerging technologies, what does that mean for money? Because they will reshape money, they'll reshape finance, and just like all those years ago, 170 years ago, when the Brits showed up here and began trading and were like, we'll sell you our drugs, but you won't take my money, huh? What's that about? Anyway, we'll use the Mexican dollar.
But when we look at this transition, right, use of AI in finance, Millennial Capital was one of the first ones, if not the first, using it for trading decision, investment decisions in the early 80s.
I don't know who was the first one, but
among the first ones, right? You had, and so you're talking about real,
I guess,
used, right, at that time.
In investing, Jim Simmons is probably one of the oldest in machine. I guess you call it machine learning, but Jim Simmons, for those who don't know, widely recognized or acknowledged as amongst the most successful hedge fund managers of all time in the modern era. And he was a maths professor in New York.
And LTCM and the others had so many Nobel laureates as well involved with it, right?
Yeah.
But what I'm trying to
where genius failed
is then these geniuses fail, and then we pick up the pieces from there.
Yeah.
What for you is that inflection point, or as our series is called, the tipping point. Do subscribe, right? Where
like
the tipping point is for money. Like, what do you feel was that tipping point from Web 2 money? If I'm going to use that very loosely for PayPal, Alipay, fintech, Paytm, wherever we are, right? To now going into this Gen AI driven money or the crypto driven money or real world asset tokenization and others. What for you is that tipping point?
I don't know if COVID was a tipping point or it happened to be coincidental with these technologies reaching a tipping point, but you could construct an argument that 2020 or late 2019, 2020, 21, which coincides with COVID, a lot of these technologies start really getting widespread adoption. Gen AI obviously is late 22 with ChatGPT and then the others, but that kind of, this early part of this decade we're living in, the combination of these profound impacts on our daily lives because of COVID and lockdowns, and us going even more digital than we'd already become. We'd already become digital, but this probably pushed us over the edge, was a tipping point, I guess. And then some of these technologies beginning to reach maturity or finding a consumer use case. AI had been around for decades. Gen AI was bubbling away in the background. The launch of a consumer-facing, easy-to-use interface that ChatGPT was suddenly took it to the next level, because everyone, literally everyone, from prime ministers and presidents and CEOs to, granddads and grandmoms, they could, now use or understand, interact with. And so AI just went right to the top of everyone's agenda. By contrast, blockchain technology didn't have that easy user interface. AI kind of had their iPhone moment with ChatGPT in November 2022. Blockchain's not really had an iPhone moment, or crypto. It's had different kind of moments, particularly in smaller communities. Now, these communities often involve hundreds of thousands or millions of people, but not billions. Not mass adoption. So there are lots and lots of, particularly when you go to younger demographics, there's a higher percentage of, like if you look at, certain types of
Gen
like,
Zs, yeah.
or even like in the US or in the UAE, if you look at affluent college-educated males of 25 to 27 years or whatever, those kind of demographics, it's actually very high penetration, but not the whole population if you look at crypto adoption or Web3 adoption. And so it's not been the same as AI, but oftentimes innovation or something that grows virally, what you need is an intense fire. You need a small community of true believers.
Okay.
And it sounds quasi-religious what I'm saying now, but
faith.
Yeah, because like
it's all about faith, right? You believe that this money is backed by some government that can pay it back.
And you need for anything new to take off, you need a small community of true believers who will survive and endure mockery or persecution.
Sure.
And before the Roman Empire adopted Christianity as a state religion, there were a small number, often persecuted, true believers. I'm not saying blockchain is Christianity, no disrespect to anyone, but when these ideas and these movements start, it's technology or an idea, but it's a community, and that's what you're seeing in Web3. And the ideas behind it are beginning to get traction at a bigger level post-COVID than pre-COVID. So I think COVID in a way is like the game changer, the catalyzer, and all of this.
Fair, and I also feel two other things, your views on this would be great, is we see cycles that follow a huge investment cycle, if I may use that term.
Cycles that follow cycles.
Cycles that are like, so let's say, you have investment
in
Nah, it's all right.
Yeah,
We'll keep it.
Outtake.
Outtakes. But in terms of, so if you look at the ICO boom of 2018, right, and then you had a big crash in 2019. But then you still had some of the big names like Block One and a bunch of others raise billions of dollars. You then started seeing that innovation come through because there's a lag, right? There's a 2-3 year lag in most cases. You then saw this big boom in fintech in 21, 22, and we probably may see that coming up in a few years' time. And with that in mind, we've seen a lot of investment go into financial technology by the banks now and the institutions, broadly not just banks, financial institutions. And do we now feel that the approval of the Bitcoin ETF by the SEC in the world's largest economy, where crypto regulations are still being sorted out and probably are not going to get sorted out for a couple of years or at least a year more, do you see that as like the world's largest asset manager with the AUM bigger than most countries bar a couple, BlackRock, and some of the other names coming into this world, is that inflection point, at least from an institutional adoption and the change in attitude? Without naming names, there have been some big name CEOs who've ridiculed Bitcoin and other
what could
assets.
you be thinking about?
I don't know these, but the banks, their trading teams seem to love it. But long story short, I mean, you've had these transitions take place, change of views as well. So are we now in this world where if the biggest asset managers in the world are looking to get their investors to come more from TradFi than say, they're not your 25 to 27 year olds in Brooklyn or in the Marina in Dubai or in LKF in Hong Kong. What are we talking about? Like, is there serious momentum now in your view, or is this still gonna take a slow burn?
I think we're, no pun intended, at a tipping point.
Okay, I'm happy if it is.
But, we're almost past a tipping point.
Okay.
Tipping point's happening or happened. Before it was almost like a meme. The institutions are coming.
Yeah.
I mean, well,
or they've done a POC. Look at it, like 5, 7, 8 years ago, like UBS coin, JPM coin is like many years old. Yeah.
The institutions are coming. It's kind of ironic, right? And crypto, particularly Bitcoin. I mean, like, particularly in America, maybe less in Asia. The whole cypherpunk movement, the libertarians, the freedom. And I don't mean that in a disrespectful way, but that whole strand of crypto must look at what's happening now and going, what? Because Bitcoin was supposed to be kill the Fed, right? Freedom, right? Kill the bankers.
Intermediaries,
yeah. I mean, it was like kill big money, kill Wall Street, kill DC, freedom. That's not all of Bitcoin. That's one important strand in Bitcoin. That was about decentralization, right?
Decentralization, disintermediation.
Why is there value? Philosophically, why is there value in Bitcoin? People are like, wow, it's hard money. What do you mean it's hard money? Well, there's only 21 million Bitcoins ever. That's what the code says, right? And I could say, so what? There's, I could print 21 million of these books. There's only 21 million. That doesn't mean there's value.
Yeah.
Maybe valueless, that book, just because there's 21 million max, or even 21. I could print 21 copies of that book, or my publisher could. I hope they print more than 21, but if they print 21, there's no value. But if what's inside it, I'm not saying it's good, by the way, but if what's inside it makes you think, then there's value, right? And then if there's, like in the London book launch, we had 40, and then people were like upset. They're like, oh, because they wanted, because we had, we were lucky. We got a lot of our friends. We had a lot of friends. They showed up and they wanted copies, and we created some scarcity out of the 21 million
I'll buy
Bitcoins.
Your book, get me a coffee later.
But the intrinsic value of Bitcoin, if there is one, it's not just that's 21 million. It's I'm doing decentralization. I can do transactions without a central body, central authority, central control, central banks, and so I think it's in some way deeply, I mean, if you're in the cypherpunk libertarian side of crypto, you must be turning in your metaphorical kind of philosophical grave right now, going, this whole rally, right? I mean, how much of this rally we've had, I mean, okay, actually last couple of days kind of selling off, but the last 6 months,
it was 42 to 47 pre the announcement of ETF.
The kind of, I mean, if you look at most coins in the last 6 months, it's like up only, not all, but many, at least by market cap weighted, up only, and it's been up only. The main reasons seems to be because of this. The institutions are coming, and you're like, really? That's kind of weird. Now, that's a very, I don't want to say San Francisco narrative of Bitcoin, but because there's another narrative, which, and in a way, Hong Kong, and there's a whole subchapter in here about Hong Kong and crypto, because this will be, of course, if you're following Musheer here in this time zone, this is not new news. You already know the importance of Hong Kong. In a way, Hong Kong, I mean, Bitcoin and crypto found product market fit in Hong Kong. It's a match made in heaven.
A long time back.
It's a match. It's literally a match made in heaven. Why is it a match made in heaven?
It's the home of Asian money and people who are very experimental with investments, right?
Totally.
Risk takers. They love experimenting, find new ways for their growth. Yeah. Plus, you do have the momentum coming in from mainland China, where you have also a lot of OGs and whales in Bitcoin.
I have also chapter. It wasn't my original idea. This is based on lots of friends and industry contacts who are much deeper into Bitcoin and crypto in this region than I am. I'm not based here. I'm a tourist to Hong Kong, a professional tourist. Like I'm maybe a traveler in the Bitcoin world. I've got a chapter. It says, "From China with love via Hong Kong" in my crypto Bitcoin, because in a way, in the Western narrative, and particularly in English language Twitter, we underplay the pivotal and crucial role of Hong Kong in crypto, particularly Bitcoin. And in that narrative, it's not about freedom from the Fed. It's a different kind of freedom, but it's about, moving money. It's about making money. It's about having fun, speculation and gambling, but it's about actually, it's an efficient way to move value around. And oftentimes, even when I talk to Asia-based policymakers on CBDCs, completely different to Bitcoin, it's centralized.
Yeah.
They say, yeah, we like CBDCs because it's potentially an efficient economic way of moving value cross-border. That's the, if you listen to the MAS stance on wholesale CBDCs, that's kind of one of their arguments. It seems to be efficient.
And Hong Kong's also, in a sense, with the Bank of International Settlements Innovation Hub,
Yep.
Hong Kong Center, Benedict and team.
Shout out to Benedict. Hope you're having a good time and you're
yeah.
off-site. I'm sorry you're not here to meet us. We could have been doing this with you, Benedict. But
next time.
Yeah.
But the M-Bridge is a project that started off initially as Project Lion Rock. Right?
I like that.
Right?
Lion Rock.
Which was looking at CBDC transactions between a pilot. We had between Hong Kong Monetary Authority and the Bank of Thailand, right? Which then evolved into M-Bridge, which then brought in PBOC's financial team looking at how CBDCs could help, and then UAE Central Bank coming in, which made it a bridge, which wasn't dependent on other currencies in terms of being pegged. At least the three of them are definitely pegged to the dollar in some senses. You now had a platform where you have efficient way of exchanging value in your local currencies and supporting your businesses. We'll go into retail CBDCs separately, but that I think is that conversation you're talking about, why the efficiency kind of works. And you've had millions of dollars of transactions run through in the last pilot for M-Bridge via the pilot, but now we're seeing that move into reality as more countries show an interest. You have the BRICS movement in terms of alternative currencies.
There's no cement in BRICS, but that's the only problem. So they're kind of a bit loose, these BRICS.
They'll come together.
I don't know. I disagree on that.
Focus, alternative economy. But what I was going to go towards
some of those countries are.
We are now here at this tipping point, right?
Tipping point.
Once all of that spills over,
yes.
20 years in, right? 2044, as I'm going to use that term.
2044.
2044.
2044,
Where do we see the future of money? Where? What's going to be... Will money still be a thing?
Money...
I mean, I'm challenging thousands of years of history in terms of value and money, but will money still be a thing in 20 years, or are we going to go back to Wasta? Wasta is the conversation that is an Arabic term, or also used in the Middle East and India and South Asia, which is essentially favor for favor, right? I have a Wasta, it's the Guangxi element in mainland China. Are we going to go back to that in some senses, or is it, are we being too Blade Runner, too Space Odyssey 2001 or whatever there was, right? You saw these videos where will the world be in 2000, and we're not yet the Jetsons.
Where are the flying cars? Where are the flying cars?
Dubai may have them in 5 years' time.
Flying cars? Those ones at the moment just go up and down.
Still there.
Maybe one day. Where are the flying cars is what I want to say. Are we going to have money? We've had money since the start of recorded civilization.
Sure.
Back in wherever, Babylon or Mesopotamia or whatever. The first bit of writing that survives, first fragment of writing isn't a love letter or a piece of religious poetry. It's a debt contract. We're going to have some form of money. The form factor of money will change, or is changing. And we don't have enough time right now. We've literally run out of time because we've got to catch the metro or the ferry back to the island.
Back to the present.
Back to the present for lunch. So we haven't got enough time to unpack this. So yes, money will be around. The form factors will carry on changing. One thing I'll say is I think all these digital technologies, including digital assets, might end up reinforcing the role of the dollar. And I don't mean the domestic dollar that people use when they're in Starbucks in LA or Austin, Texas. I mean the offshore dollar. So there's a reason why London became, again, in the second half of the 20th century, an international financial center. It became the home of offshore dollars.
Also known as Euro dollars. That's where I started my career on.
Yeah. Boom.
Yeah.
So I believe we're into a world of Eurodollar or offshore dollar 2.0. You started your career in Eurodollars. Maybe you'll be continuing your career in offshore dollar 2.0. Yeah. These are dollars that circulate outside the USA, and in this 2.0 format will be potentially token based.
Okay.
And why will that grow? Number one, look at the crypto world today. We price everything in dollars. I mean, yes, I know you can price it in Bitcoin, but we price it in dollars. The biggest stable coins, 99% of them are in dollars. Number two, the TradFi or RWA, real world asset movement you were talking about, Musheer, they're about international financial assets. And even when they're not in the US, they're denominated in dollars. You do a VC deal in India or Pakistan or in Dubai, you don't price it in dirham, Pakistani rupee or Indian rupee, you price it in dollars. You do an international bond deal, etc. 50 to 70% of global financial assets are in dollars, which is 2x to 3x the size of the US economy relative to the global economy. And as these TradFi assets get tokenized, they'll be disproportionately tokenized in dollars. So this is not a comment on the US economy or the political system. I have no strong view on that. But we all, for good or bad, use the dollar. Now, on a 20-year view, could that be replaced by other currencies or supplemented? Possibly. I mean, 20 years ago, if you were doing this conversation in 2005, we would have probably argued the euro. The euro was a very close competitor. In some cases still is, believe it or not, in payments. And we don't think about it because it's not part of the narrative. The narrative is all about the BRICS. But the euro was the nearest competitor to the dollar. If you look at cross-border flows and international flows 20 years ago, it's sort of slightly slipped recently. Who knows in 20 years' time? Or it could be something new. It could be a synthetic currency, but the history of synthetic currencies are as patchy as the history of synthetic languages. Esperanto never took off. Hundreds of millions of people do speak languages like Hindi or Mandarin or even Bengali, my original mother tongue. But very few people speak it as a second language. Less people speak English as a first language than Hindi. And definitely Mandarin, Chinese. But everyone speaks English as a second language. And that's the kind of role of the dollar. It's kind of everyone's second monetary language. So I know you were probably not expecting this. You're probably thinking I'd talk about colored coins or, I don't know, dog coins or Bitcoin as the future currency. I think it's offshore dollar 2.0.
I was hoping Neuralinks, money is a thought.
I just think it.
Could be, I just think it, I send it across to you.
Boom, done.
Boom, right?
Boom.
And Tesla adds a spark to your car when you do that, right? That
Maybe.
Could be a future of currencies. Ronit, pleasure doing this with you. We will see whether it's going to be the BRICS who I have my money on to form an alternative world where it may not be dollar dependent. And this is, again, not a statement on the US economy.
Not investment advice.
Not investment advice either. But
NFA,
I just feel
DYOR.
You see different systems evolve as other economies become stronger, bigger, and are being trade among each other, right? So that fundamentals change. Yeah. But we look forward to, again, reading your book in detail.
Yeah.
And we will touch base, probably not in 20 years' time, but maybe sooner than that, and talk a little bit more about
20 years is too long.
The Middle East, Hong Kong, and other elements in the coming months. So thanks for joining us for the tipping point of the future of money. Yeah. This was Syed Musheer, founder and MD of Finstep Asia, with Ronit Ghose, global head of the future of finance at Citi. Thank you from the Lion Rock View in Hong Kong. Subscribe and follow our page for more. Thank you.
Hit like.
Hit like.